Monday, June 27th, 2022, Maneco 64, home of alternative economics and contrarian views. So for those of you who have listened to me for the last few years, you know that I'm really frustrated sometimes about how people define inflation, but it looks like the general public might be waking up to what inflation really is. And that's what we're going to talk about today. So I recently saw an article in the Daily Telegraph, and I'm going to share this with you. Let's have a look here. Here we go. This is from June 25th. So it's on Saturday. Voters turn on government and Bank of England over cost of living crisis. Poll finds will fuel concerns among Tory MPs that party is on course to face huge backlash over handling of economy. So let's quickly go through this article here. I'll zoom in. Voters are turning on the government and Bank of England over the cost of living crisis, with almost 1 in 3 saying excessive public spending is significantly to blame for high inflation. There you go. I've been saying that for many years, that it would lead to not inflation, because excessive public spending is inflation, right? And when the central bank monetizes the debt that's used to perform that public spending, that's the other side of the coin of inflation. What we're getting now is the consequence of inflation. Yes, they're not there yet, but they're getting very warm, almost hot in terms of finding what inflation really is. A survey of 1,500 people for the Telegraph found that 29% believed soaring levels of government spending were to blame for rising inflation or for rising prices. And that's how they've tricked people for decades about inflation and rising prices. They confused both. Rising prices is not inflation. And the other thing that bugs me is when people say consumer price inflation. No, consumer prices don't cause inflation. It's consumer price rises. So let's continue. Then disruption arising from Russia's invasion of Ukraine and supply chain problems caused by the COVID pandemic. So you see, they're now blaming the government and not the Russian invasion, nor even the supply chain disruptions from the pandemic. I listened to Putin at the SPIEF conference, and he mentioned that, and he said, yes, it might have helped the trend. You see, these things help the trend of government spending and inflation, but they're not inflation itself. The findings will fuel concerns among Tory MPs that the party is on course to face a seismic backlash over its handling of the economy, as Boris Johnson and Rishi Sunak face down demands for tax cuts. Well, I can tell you, any party, mainstream party, would have done the same, but I guess people have to choose one or another, because so for some reason they think politicians can handle things a lot better, right? It's just a bit depressing. Responding to the poll, one senior conservative who has not spoken publicly against Mr. Johnson said that is bad. The MP had previously believed that the cost of living stuff hasn't really hit the public yet. He must be in living in another world, right, to think that people are not concerned about the cost of living crisis. So they've got a chart here of what's gone up the most. And it's amazing that they've all gone up like, more than 30%. And yet the CPI is 9.1, right? It doesn't make any sense. They're still lying about it. So we're gonna stop this now here. And yes, I've mentioned a man called Felix Sommery. Many of you are familiar now with Felix Sommery. There's an autobiography of him, or his memoirs, called The Raven of Zurich. And I'm going to put a link to that below in the description. You can read about him. He was a banker in the early 1900s, mid 1900s era, very influential banker. He was originally from Austria. He moved to Switzerland, to Zurich. That's why he's called the Raven of Zurich. He predicted many things. And he was trained at the University of Vienna, where the Austrian school kind of germinated, the Austrian School of Economics. So this is what he said. And I'm going to share this with you, actually, because you can see it better. There you go. The state alone is responsible for inflation. Inflation without government, or indeed against government, is impossible. Felix Sommery, the Raven of Zurich. And so you saw that survey from the Telegraph. It looks like people are waking up to it. They're still not there yet. They still think that the rising prices is inflation and not the consequence of it. But unfortunately, I think it's too late, because the inflation is already baked in the cake. And as I said, what we're getting now is the consequence of inflation. And even the central bank, for the central bankers, the Bank for International Settlements, they're worried about it. This came out yesterday. I spoke about this in my live stream last night, but if you missed it, this is what they're saying. Leading economies at risk of falling into high inflation trap, BIS says. Again, yeah, it's the high price trap. The BIS, you might think, oh, they should know what inflation is, but you have to understand, a lot of these PhD economists, a lot of these people working for these major institutions, they've been brainwashed. I was like this before as well, prior to learning about the Austrian School of Economics. I thought CPI was inflation. So Bank for International Settlements calls for more aggressive action from World Central Bank. Well, they're saying that they need to tighten more, and that we should face the pain of recession if that's necessary. But I think, yeah, the horses have bolted out of the barn already, and it's too late. And I think, yeah, people are already have that psychology that prices are going up, and they're going to buy things that they need more, and they're not going to wait because they know prices are going up. And this is very interesting because inflation in the last 20 years or so has been associated more with emerging markets. We always thought here in the West that it couldn't happen here. But look at this, the proportion of countries with high inflation has exploded. Proportion of countries with inflation, well, again, I'm falling into that trap because I'm reading from the FT, but it's not inflation over 5%, it's prices rising over 5%. For inflation, they should really put the M2 or M1 there. But anyway, look at that. For up until this year or last year, it was pretty well controlled here. There weren't many countries with 5% rising prices, or inflation as they call it. But now the advanced economies have a lot more countries with prices rising more than 5% as a proportion of the emerging economies. So I find that very telling. And this just goes to show you here that there's no turning back, I don't think, unless they destroy the economies, they really bankrupt everything. And yes, and then there's no activity in the economy. But politically, can they do that? Well, we'll have to see. I don't think so. So, yes, it's encouraging. Let's hope the old saying, I don't know if it was Lenin who said it or Keynes in regards to inflation, that it's the best way to destroy the bourgeoisie or the middle class. And they're doing a great job of that, of course, in the West, because only one individual in a million knows really what inflation is. And I think it's still the case, but it looks to be improving. They're getting warm, as I said. They know that the government is to blame. They also mentioned that the Bank of England is to blame for not raising rates that quickly, but they don't ask the question about the Bank of England also printing all the money they have or reserves, and also keeping rates at zero for over a decade. And that's why I keep making these videos, to warn people about this. I've been warning since even before 2008 that they were inflating already. And that's why we get the crises that we get in 2008, 2011, 12 in Europe, 2020. It's because they inflate and they leverage the system. And I'm not saying that in a system based more on free markets and no central banks, you wouldn't have crises, but it would be a lot smaller and contained, and it wouldn't affect the general public as much as it does now. So with that, let's quickly look at where the markets are this morning. Today I'm using my Zoom here, so I'll be able to share with you the screen that I look at, so you can have a better picture of what I talk about when I give you the prices. It's 8:30 a.m. London time, so you can see that we'll zoom in a little bit here. Spot gold is trading at 1837, so it's up almost $10. High's been 42, low 26. Silver is up 32 cents or 1.5%. So it's a good start for the precious metals this week. It's at 2146, as you can see, high 70, low 08. The Dow futures up 134. NASDAQ is up 70 points. S&P 500 is up 18. And the FTSE is up 46. FTSE recently got down to like 7,000, is now back up to 72.58. Euro Stoxx 50 there. Sterling up 0.4, 123.26. Euro up a quarter of a percent, 105.82. The dollar is down slightly versus the yen, as you can see there. Dollar down as well versus the Swiss franc, 95.69. And dollar unchanged really versus the Chinese yuan at 668. Now we move to the other currencies. I need to change the page. So we got Aussie dollar unchanged, 69.40. Dollar down 0.2 versus the Canadian dollar, 129.68. And down here, we've got the Kiwi dollar up 0.1 at 63.19. Now we go back to the commodities, the other commodities that we cover, or general commodities. We got crude oil, WTI up a quarter, 107.04. Brent is up about a quarter as well, just below 110. High grade copper up 1.5 at 379. Natural gas is at 617, down 1.5%. So over the weekend, you had this G7 meeting in Germany, and they always like meeting in very expensive resorts. I think they met in Garmisch-Partenkirchen. I think they had a Winter Olympics there, I think in the 30s, and Bavarian Alps. And I think they decided to put a cap on the price of Russian oil. So Russian oil exports to the West. All that's going to do, though, is create more shortages, because the Russians are just going to sell it elsewhere where they can get more, and we're going to have less oil here. We also heard that they are going to ban Russia from exporting its gold. I don't think it's going to make much difference for them because they want to keep the gold, right? So let's quickly look at where the ruble is. Ruble is not on that page that I was checking all the other prices. Well, the ruble is like stronger. The dollar is dropped like 0.2%. It's just above 53. So much for, the action from the clowns at the G7. I think that's what they are. They're clowns, really. So just to finish off, let's quickly look at where the 10-year yield is. 10-year yield is at 317, up about 5 basis points. So it's actually picking back up, the 10-year yield. So yeah, if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on all these other platforms below here. I wish you all a great start to the week. Take care. Bye.